Hello there, my friends. Chris Marcus here with you on Friday, July 28th. More important than any of this darn economic stuff. Hope you're getting ready for a great weekend. Hopefully, you're hitting a barbecue or something, doing something fun, and taking a break for all this for a couple of days. But for those of you that just love the market so darn much that you want a little more commentary, quick video today about some of my thoughts on the economic data that gets released, throughout the month, and really how to phrase and perceive and view that, and what you can take away. For example, today I woke up and saw a U.S. Wall Street Journal alert that the U.S. economic growth quickened to a 2.6% rate in the second quarter, and economists expected an increase of 2.7%, and now the Wall Street junkies, which I was a former one, so I say that, making fun of myself as well, can react to that, and everyone can go nuts. Although in the end, how accurate is this data? How useful can it be in terms of grasping what's really going on? And, well, I suppose there are multiple views, but I'll just share mine and why I really kind of tune most of that stuff out. Simple way of thinking of it is that, all right, you're saying the economy grew at 2.6%, which is whatever it is. But how do these numbers get calculated? And are there things that can affect the calculations? For example, one of the ones that we talk about all the time is the printed money. So let's say the Fed comes out and decides to lower interest rates or create a quantitative easing money printing package. Sure, a lot more money has to go somewhere. It's going to juice up the numbers. And again, please don't take my opinion for this. Don't take my opinion for any of these things. That's not really the point of this channel, but rather to introduce an alternate perspective, which you can then take and research and verify or disprove and see how it matches up to the mainstream view that we've been conditioned with for so long. But again, it's any of these numbers, depending on the amount of money you print, sure, well, it's going to make the numbers look better. And I guess my point there was that you don't have to take my word for it. The Fed actually tells you that, well, we're lowering interest rates to boost the economy. Translation: we're printing money to make things look better. We don't have a plan of unprinting it. And if we did actually unprint the money, well, we'd have a little bit of a problem. Reference collapse of the housing bubble or dot-com bubbles. And take a look at what was happening with the interest rates leading up to those periods. Again, I've mentioned before, there's a great site by a fellow named John Williams called Shadow Stats. And John is a bit of a cult hero in the, in the non-Wall Street financial industry, because he just looks at the way the numbers are calculated. For example, when we had the housing bubble collapse and unemployment, it was getting to whatever number it was, and people were saying, well, they were comparing it to the numbers in the Great Depression, yet the formula isn't the same, because they're always changing the formulas to make the numbers look certain ways that influence people to take certain actions that, in my own opinion, usually work out a lot better for the banks than they do for you or I. I think John mentioned that following the housing crisis, if you actually use the same formula and were calculating the numbers in the same way that they were during the Great Depression, I think unemployment was in the mid-20s, although I guess the most common thing people reference is that if people have given up looking for work, they just don't count them anymore. Now, is that really telling you what's going on with the labor situation? I would say no. Yet, to the degree that others still do take stock in it and make their decisions based off of that, there is some relevance. Again, I like it's actually interesting, the trading shop I used to work for, part of our training, we had to do poker training because of the similarities between poker and the financial markets, where you're dealing with imperfect information. And now maybe something happens in a poker game that you would perceive one way, yet you know your opponent, while you may not agree with his reaction, if you understand what he's going to do and you can game that, can give you some leverage. So to the degree that understanding how the market is going to react and how other people are viewing these things, yeah, I think that can be useful. Similar to how we talk about the silver market, where from everything I can see, the banks have just been slaughtering these chart readers for the last couple decades. Because again, they know what the chart readers are going to do. They game that and manipulate based off of that. So there is some relevance, but whether you look at these numbers and think this is an accurate picture of what's really going on, just remember, someone can press a button, make any of these things go up and down, which is what it is. Last thought that I'll share with you on this one. One of my favorites had an old website, which is, it's not up anymore, this article, although I remember enjoying writing about this a couple of years ago when Obama was still in office. And again, I'm not getting into political sides. I think they're both part of the Republicans, Democrats, both part of the same shadow government party that, gets everybody riled up against each other. And if you don't believe me on that one, just look at some of your friends on Facebook that get heated posting these political commentaries, and it's amazing the vitriol that comes from keeping people divided and thinking they have to take one side or the other. So in either case, this was, I believe it was around one of those debt ceiling debates, and one of the rare times where someone was even making the impression of caring about the runaway spending. And Obama proposed as a means of deficit reduction to change the inflation formula. Because you have a lot of fixed income and different payments that if inflation's higher, the government has to pay out more. If it's lower, they have to pay out less. So it was one of those situations where someone inadvertently, without even realizing it, was essentially openly admitting that the numbers are fraudulent. Because if he's saying to save money, we're just going to say inflation was less than we believe it actually was and call that a means of deficit reduction, my opinion, I think that tells you all you need to know. If you really look, and again, if you're interested in digging into this deeper, John Williams' shadow stats, great place to start. I find there's a similar mentality behind all of the data, so it's not just labor or GDP or inflation, but they're not, it's not the honest numbers that maybe we grew up believing they were, and just something to be careful about. Again, I try not to sound like the conspiracy whack job in these videos and just always denigrating what's happening on Wall Street, because that's not, I often find it sad and frustrating in a sense where I grew up was told, go to school, get good grades, go to college, get a job, and went into the financial industry with the mentality of wanting to do a good job, learn, understand what was going on, and do honest work. And I think it's unfortunate that I've come away, based on all the things I've seen, having these types of thoughts about how it works, yet whether you agree with the things I'm saying or not, the one thing that I can always promise you is I'm going to give you my best honest opinion. I'll tell you if I think something's a fact, if I think something's speculation or intuition, and again, just present what I see, and you can take that and verify these things and make your own opinions. So I'm not trying to be the doomsday guy, but I do think it's time that people understand what this system really is, because it's been used to con people for a long time. I think we're nearing the end of that, which ultimately I continue to choose to believe will be a very positive thing for the world. And hopefully these are going to help prepare you for it. So with that said, enough economics for today. I appreciate you watching. I hope these are helping. But I do have one piece of advice. I try to rarely offer advice or tell anyone what to do. But after you hit the subscribe button or leave a comment below, go out, enjoy a great weekend, do something fun, give someone a hug, smile, and remember that we're all still here and we keep going and do the best we can each day. And either case, I appreciate everyone who's been watching and commenting, and hope you have a blessed weekend, and we'll see you again on Monday.